It's ICT with ICT's Pro Trader Club entry for February 8th, 2011. I apologize if I'm very low, but I haven't been feeling well since last Thursday, so it's been difficult for me to talk. Very sore throat, so I apologize. Okay, we're looking at the cable. It's a daily chart. Let's zoom in just a little bit. Okay, we have presently market trying to test November high in here. November's high comes in at 162.98, made on the 4th of November. And then we have the highest, most recent swing high, 162.77, so about 21 pips short of retesting this old high in November. Presently, we have old resistance. There's highs here, here. Okay, so with old resistance, now trading back down to it, it should act as support. Potential bull flag in here, suggesting a push higher in price, potentially taking us above the November high. Obviously, if this old resistance, now support, gives way, we could see price try to trade down in here and try to retest this low or even below in here. We will look for price to I think price, if it does break down, I think we'll still stay within this range, these lows in here to this high in here. I don't want to see it do that. Obviously, I want to see it try to trade above this high in here, because either it would give us a longer term potential swing higher, then possibly trading up to, oh, it's a little too much, up to this highs in here. Okay, so that's where it may be reaching for. We don't know until we take out this high here, or if the support gives way. Let's drill down to a 15-minute chart, and I'm going to show you, because I've been getting some of these questions in email, and for privacy's sake, I'm not going to reveal the individuals asking unless they give me permission in the email. I won't show any emails on these videos, much like I do with the thread. It's common knowledge, everybody sees it. I'll share when I do feedback sections, but if you do have a question in an email and you don't mind me sharing it with others on the video segment, just shoot me permission in the email stating that you don't mind your email showing in these video clips. And if you don't want it to appear, if it's not suggested in the email that I've been given permission, I won't share it. But this has been asked, so I can go over that information without divulging who it was that asked. So let's talk about pivots. Okay, when you go down and you install your pivot daily macro indicator, everything on your screen, okay, when I've been highlighting in the videos, you've been seeing this 0 here. Now, I've had questions sent to me in email, and I believe some of them are rather pointed. In other words, they were not necessarily looking for instruction or advice, they were looking to find fault. And unfortunately, when individuals come on not just in this forum, but in other forums in the past I've been on, whenever you run into someone that's willing to share, and attention starts to divert to them, jealousy starts to come on, and I'm not here to incite jealousy. I'm in here just to basically share. And for those that have problems with that, chase somebody else on these threads, because I'm not selling anything, and if you can make money selling your wares, go right ahead. I'm not trying to take any sales from anybody. So I had to throw that in there because I'm getting individuals that obviously are threatened by my presence on here, and just save it because it's wasted effort. So I'm not going anywhere. So there you go. But the ones that have asked about the pivots, they have suggested that I have taught that using midnight to midnight New York Standard Time for pivots is the way to go. That's the way to go for me for my London session trades. But I've had individuals question whether or not we can use GMT pivots. Whenever you load your pivot daily macro indicator, if you leave this field here set to 0, you're actually loading GMT pivots. Okay, so let's plot that now. Okay, this is what you see for the GMT pivots. Let's go back into that, so we're highlighting not just today, but all the previous sessions. So that means you got to go to show only today. Right now it's set to true. I'm going to toggle that to false, and that will populate your chart with all of GMT pivots for as much as your data can download. Now, if you want to use New York pivots like I use for my live trading in London session, go back in to your indicator, or load it up from the beginning this way. Set the show only today to false, so that way you show all your pivots. And then for me, -5 is where my pivots will load up for New York Standard Time. Okay, and then what I'll do is I'll just take a vertical line, drop it in, and there you go. There's your New York time trade into a new session or new day for North America. And then your pivots will be lined up for New York Standard Time. Okay, so now let's go to just a little more tight. Zoom in a little bit. Alright, this was the London session trade. Okay, I did not trade non-farm payroll in here, and this is the reason why. We're not going to go into that, because since I don't trade it, I'm not going to advise everyone else to trade it. So there you go. Here's your central pivot, R1. What lies in between R1 and central pivot? It's midpoint. I'm going to quiz you guys. Which pivot is this by name? MR1, because it's the middle reaching towards the first resistance level. So MR1. Now I'm going to allow you to use your imagination, because I like my charts very clean. I can visualize, much like you probably can, where 50% of this and this is, and that's right in here. So we're just going to allow that to be our measurement for the mid pivot. Okay, so price started the new trading day going into London. Okay, and my methods suggest that the high or low is made during the first 4 hours of London session, and generally you will see the London session open at 3 a.m. New York Standard Time as the beginning of the London session swing. Okay, so in this area here, you would see price trade up into our mid pivot. Okay, so now what you want to do is go over here, grab your Fibonacci, use the previous high, drag it down to the lowest low. So yesterday's high and yesterday's low. Okay, here is your 62% retracement level, right in here, and your 79% retracement level. Anywhere between these two pivots, ideally midpoint between the 62% retracement and 79% retracement. Midpoint in there is where I like to get my entry. Several opportunities in there to get short. Once you break down through central pivot, trade it down to S1, back up to central pivot, gave up the ghost, traded shorter down to S2, where it bounced back up to S1, and then slowly drifted into where we are presently. Okay, so short was used at 161.50. I used that institutional level, and I actually had a additional entry in here. So I went short, took profits at mid pivot between central pivot and S1. Okay, I took 30% off there. Came down here, I took another 20% off here. 50% of the trade remained. Stop stayed here until we broke through S1. When S1 gave up the ghost and traded down in here, stop fell to this high in here, and I took profits at 160.50, which is just a little bit above where S1 was. I'm sorry, S2 rather. So I didn't catch all that move down in here. This low here was potential stop running. And as you can see, we went below that and traded back up into today's range. And using the previous videos and London session trade, I'm not going to cover in here, but I want you guys to study what took place in this area right here and share on the thread what you discovered. Maybe some of you have taken the trade, maybe you didn't, but go over this in your charts and tell me what you see. But that was the London session trade for today. And I apologize if I'm keeping it very short and brief, but it's very difficult for me to talk. I have a very sore throat, so that's why I've been quiet the last few days and haven't been posting, because I didn't have a voice at all. So, and well, let's take a look at the thread and see what people are saying. Okay, we have a comment where it says they have discovered that the most simple route is the most effective. Yes, that's true. Keep it simple, stupid. That's a very good motto. And he says that 90% of the time that's his hang up. Basically, that was one of my problems when I first started. So I like seeing these epiphanies for some of the folks that are getting to the next level in their trading, so that's good. This question was about the 1.27 extension. Very good answer here. Thank you for that. That's right, Jack. No, you don't need MT4. Thank you, 636. Okay, Hordain. If I'm mispronouncing it, I apologize. Yes, I live in Maryland. I've already answered that earlier in the thread. I mean, the video rather. I do trade the London session. I do try to get about 2-3 hours of sleep before I trade it. I get up around 1:30, 2 o'clock, and run my levels and see where price is at and run my pivots, and that's pretty much what I do. Once I get in the trade, I give it like 20-30 minutes. If it starts moving in my favor, then I go to sleep. and to let the trade unfold like it's going to. I can't change it or force it, so it's going to either work in my favor or stop me out. If it stops me out, or if I see it's going to stop me out, I'll stay with London session until I get either another trade or I'll move to the sidelines and just go back to sleep. But essentially, once I get the trade on, I go to bed. Alright, very good. Looking for 50 pips for the week. Not shooting for the stars, that's good. And it's very encouraging. I like to see that. So, yeah, keep that focus and you'll do well. Alright, Clark is saying that I'd like to see some kind of checklist. Well, I have it, guys, and but it has tools referenced on it that we haven't talked about yet. So I know as soon as I post it, if I do that, I'm going to get 50 million emails. And again, it's not that I don't like answering emails. It's just it's hard to keep up with them as it is right now. So if I throw everything, I'll never be able to keep up with it. But I'll give you a checklist that you can use for what's already been given just in a moment. So let's continue through here. Alright. Well, I really don't trade the Australian dollar. I have to prove a point in the past, but I like to trade just the cable, and if I have a tendency to be a deviant, I'll trade the euro. But price did bounce in here for you. It came back down a couple times and didn't sweep underneath this low, but did give you an opportunity to get some kind of pips going north. But it's been rather choppy. But again, I don't trade the Australian dollar that much, so not to try to blow you off or anything, but that's just a currency pair I don't trade too often. And looking at the poll, I'm seeing a lot of newbies are posting that this is a good resource for them, and I appreciate that. It's an encouragement for me to see those types of things. And I like this feature here, guys. Baby Pips made some changes, and I think that's a pretty cool little addition. I know you can vote on the thread with stars or such, but I'm not sure where that is now anymore. But if you're going to support the thread, I'm encouraging you guys to use this poll here. I did ask to have it removed, by the way, but they haven't done it because I wanted to change this question: does ICT got the goods? That was only like a slang term for my friends in New York. That's how they talk. But if you are getting information from the thread and it's very useful to you, I appreciate your feedback. But again, you're really giving feedback with an incomplete thesis on the material. But I can honestly tell you I appreciate whatever compliments and encouragement you give. So if you feel like doing that, that's great. If you don't, just hold your tongue, and there it is. Obviously, if you don't think it's a good resource, then say so. But I'd like you to, at least if you're going to vote on the thread saying it's not good, at least give the newbies and those reading the common courtesy to explain why you don't think it's a good thread, simply because it's free and it's probably taken away from your sales. Be honest. I'm trying to be honest and give you what I think works, and if it's a good resource, then say so. If not, then say why it ain't. Alright, Clark is starting to get some enlightenment by seeing a real-time example. Even with the Australian dollar, the Quran was suggesting as a potential setup. These are the types of things I'm actually looking for, guys. I want to see some of you doing your homework and posting these things, and they don't have to be elaborate. Just something that shows me where you're at with your understanding of the tools, and it allows me to jump in and see and illustrate where things are in fact lining out for you. You are going to see confirmation of the tools, but you don't have to. I mean, obviously there's a lot of people following the thread, but I'd like to see a few more individuals get more active with the thread, posting what they're seeing in the market. Even if it's hindsight, guys, you don't have to say you were in the trade. Just go over the market, review it, and if you see the tools lined up for you, that's how you learn it. Even if you haven't taken the trade, until you get used to seeing the pattern, and you're only going to be able to notice it in hindsight before you can see it in the future. So study it every day. Get some chart time in. All right, Vonner. Okay, says he was able to take a short in the cable, and we already covered this. I think he may have gotten what we were talking about. Banked 70 pips. Awesome, awesome, awesome. Kudos to you for that. And he says, ICT, thanks a lot. Finally beginning to understand the power of these tools. Well, it's all about patience. Yeah, the recipe is what I've already shared so far and using them. But the real key is patience and waiting for the setup to come to you, like you said in your post. I couldn't have said that better. Hello, goodbye. I really like she's or he. I'm going to suggest it's her, but if it's not, again, I apologize. But took a short at 161.31, and then again at 160.99. I'd like to see where you got out. If you had got out, what you were able to take out of the market. Kind of like a cliffhanger here. You got me excited, but where'd you take profits, or are you still short? And you wasn't able to take the perfect entry. Well, there's no perfect entry, guys, so don't think in terms of perfect. But oh, look at this. He went long. Well, I think we got somebody that all right, very good. Hopefully you'll come back and you'll if you can post a chart, I'd like to see what you were doing in here that made you go long. But I'm excited and encouraged to see some of you starting to see the effectiveness of the tools and applying them on your own. And I really want to see more of your feedback in terms of your trades. I don't want to sound like I'm short changing your enthusiasm through email. I like reading them also, but I think it's a much more encouragement. And Baby Pip's member Sweet Pip is a good example of that, because I've had a lot of emails sent to me suggesting that they've found a lot of encouragement seeing her development as a trader, and working on her consistency and following one routine and one pattern. And I think that's the type of encouragement other readers of this thread and followers of the blog would like to see, that another member can do not only what I'm doing, but they can share their results as well. And if you think embarrassment or fear of being wrong is an obstacle, this is one of the best ways to beat it. Take the emotions out by simply sharing what you're doing. And you'll find that if you are making newbie mistakes in the beginning, the mere fact that you're sharing that openly with everyone else will force you really to be more strict and more demanding on your setups. So that way you won't be posting just because you want to be in a trade and hopefully treat it like a lottery ticket, and hopefully you'll get something big and say, look, I'm just like superstar trader X, and this guy over here, and even ICT. It's not about how much pips. It's not about how much money you're making. It's how much are you moving towards consistency, and that's the only thing that really matters. Because you can't spend my money, and I can't spend yours. And if you think in terms of those parameters, you're going to allow ego to come in, especially for men. Women, not so much, but women are just like men in a lot of the ways. They want to feel like they're right too, and that might be a problem for your trading. So that's one way you can overcome it, is openly share what you're trying to do, and it'll honestly take your learning to the next level, because it'll put yourself out there in a spotlight, and it'll force routine, repetitive, same thing all the time, And Sweet Pip is a perfect example of that. So, kudos to her. And let's go back to Clark's question of what is a good checklist. And as far right now, this is what you should do. Let's go back to a cable chart and let's review this. All right, at the new session of trading for yourself, whether that be the Asian session, whether it be the London session or the New York session, the first thing you're going to note is where are we going for the directional bias. And the best way you can do that is look at market flow, refer to the daily market flow, the 4-hour market flow, and the hourly market flow. Any two of those levels that are in agreement, for example, 4-hour and daily, 4-hour and 1 hour. If those two scenarios are in agreement, you have a really good high odds chance that the directional bias is going to be in line with the 4-hour and the daily, or 4-hour and 1 hour. They don't all three have to line up, but if you simply have the daily and the 1 hour in agreement, but the 4-hour is different, that's probably a good time to stay out of the market. That's the one caveat to market flow that I like to honor. If 4-hour is up and daily is down and 1 hour is down, I can still trade and be confident that I'm trading with the intermediate term market flow with the 4-hour. So in other words, I will trade independent of what daily and 1 hour is doing. Whatever 4-hour is doing, that's what I'm trading. But to get stronger trades, you want to have at least one more out of the three. So it could be the daily in agreement with the 4-hour or the 1 hour in agreement with the 4-hour. But I don't necessarily need to have either the daily or the 1 hour in that fray. I can just simply trade with the 4-hour, which is what I suggested in the video. Try to trade always in the direction of the 4-hour market flow. Now, you will still miss some trades, and you'll miss some good setups and entries, but ultimately it'll still give you an opportunity to catch the meat of the move, and that's really what it boils down to. So you want to get your directional bias via market flow, and then add that to the mix with pivots. Okay, news trading day in here, going into the London session. Where was price? Was it above or below the central pivot? Well, here's the central pivot, so we're above it. So what zone is that? Is it the buy zone? No, we're in the sell zone. Okay, now add to that, we've already discussed Fibonacci. Where do you draw your fibs from, guys? Previous day's high or low? Well, where we're trading at the new session here, where are we going to look at? The high is higher, so we want to grab your pivot and draw it down to the low of the previous day. Now we haven't had this low yet, so you won't use this, but we're here. So you want to draw the high down to the low. Here's your 62% retracement and your 79% retracement. So you want to look for opportunities where Fibonacci's will present a trade setup. Okay, optimal trade entry. For instance, let's assume this high was a little bit higher up, and when you drew your fibs, the 62% retracement was up here, and maybe the 79% retracement was up here, and price was doing this. Well, even though we're in the sell zone, we're not in the optimal trade entry. So you'd wait for price to trade up into that level, whatever that level would be, because we're assuming we don't have any levels in here to illustrate it, but I'm just giving you a scenario. If the 62% and 79% retracement levels were significantly higher than this, we would just simply sit on our hands and wait for price to trade up to that level, and then we would have market flow and agreement looking for hopefully down, pivot sell zone because we're above the pivot, look for institutional levels, round numbers, to overlap with Fibonacci pivots and old highs, okay, and old lows and support and resistance, session highs, session lows, and mark the ICT smart money indicator, where you would see the euro versus the cable, see any intermarket divergence, and you just look for those things to unfold and give you a directional bias, and then you use your swing projection for targets, and we discussed how you can do that. And also, if you are looking for commercial influence in your trades, you would confer of the data with COT, commitment traders, and you would use that to add credibility and strength to the trades you're taking. So, I mean, really, you got all the tools, thus far, and how it's been used and how to use them. We've discussed trading session opens and closes, what's the ideal times to trade, and all those things. When you start to blend them together with support and resistance, you get a very concise, very clear way of trading. I think what's happening is some of you are not willing to forget what you've already absorbed in terms of knowledge, and you want to add this like it's an extra piece of the puzzle that, in other words, you've already got it figured out in your mind what the tapestry of a successful trader is and a successful trading plan is. And success and consistency has eluded you to this point. And now with the tools that's being presented to you with this thread and these videos, you're viewing this as that last piece of the puzzle, and you want to add that piece to your puzzle and your tapestry. And I got news for you. The likelihood of what you had envisioned as a successful trading plan and how to approach the market, and then taking my concepts, it doesn't necessarily mean they're going to dovetail nicely. It may in fact cause you to get frustrated because you're going to try to make my methods bend to what you want your trading plan to do, and it doesn't work that way. You as the trader have to be the flexible one. The tools are stagnant. They don't change. They're always the same thing. An overbought, oversold indicator is not going to do anything but measure overbought and oversold. Support and resistance, they remain the same. They're dynamic because they change as the market trades. And that's what you have to be as a trader. You have to be dynamic. Okay? You have to be willing to, number one, not marry an idea of what the market should do. In other words, don't marry the vein. Okay? Don't think that you have to have it, the market trade in your predetermined trade direction, because if you do that, number one, you're going to miss a lot of trades. Two, you'll be unwilling to throw in the towel and admit that you're wrong and cut your losses short, and you're ultimately going to be frustrated because you want black or white, and it's not always black and white. There's a gray area in between where most of your trading is going to be found, and that's where you get confluence of events to hopefully give you the odds the market's going to move in your favor. So a checklist up to this point, that's what you got so far. If you turn the computer off right now and never subscribe to this thread again, or Baby Pips, or any other trading platform with information, you could honestly stop right here. I could never put another video on this thread, and you'll have 80% of what every losing trader doesn't have. Okay, you have a recipe with the tools, how to apply them, and if you just stick with that as your foundation, everything I teach you from this point on will be a huge impact. I mean, everything, you'll start seeing things dovetail nicely like you're hoping to see in your trading. But these are the fundamental core principles, and until you get comfortable with these, all the amplified techniques and all the concepts that I want to teach, beyond these, I'm basically going to be spinning my wheels, because I'll have 15 people understand part of this and not part of that, and we won't be on the same page. So I kind of want to move forward with a sizable group that understand where we're at. And yes, I know somebody's going to invariably sign onto this thread a year from now, and all of the teaching will be already dispensed. And then they may ask me questions via email or the thread, and then it's easy to fix that, because myself or someone else that's versed in the understanding of what I'm teaching can very easily sound off and say, oh, this is what you should be doing. And I will actually get support from you as the followers that have learned the method, and it'll help me keep things fresh and moving along. And there's no better way of learning, but than teaching, rather. In other words, if you can get a sound understanding of what you should be doing, and you find a way of teaching it to someone else, you learn it also. So I throw that out there for individuals that want to be, routine contributors to this thread and blog. I'm looking for that also. I think it will be a wonderful asset to the thread and those that follow it. But I've really worn out my voice, guys, and I appreciate your patience and understanding. And I will close here, and I wish you good luck and good trading.